Okie dokie, folks. Let's take a look at our upcoming earnings this week. Another fairly decent sized earning week, and much like last week, gonna have me mainly looking at the earnings, the stocks that reported earnings, and even some from last week for potential swing trades. But we're gonna go through this video and just give you an idea of what I'm looking for. You should have already received your matrix spreadsheet with the outline for the earnings, but we're going to go through and we're going to start with Monday morning. And this is stocks from my watch list that have earnings. I don't care all the stocks out there. I only trade stocks I research first. So Tenneco, not really looking for a trade on this. Sadly, I was long on this and got out too soon. But Monday morning earnings, if you are in it by chance, just keep a look at it. A couple that I'm interested in NQ. A couple weeks back, we had on our watch list that options in lieu of common shares. Never got to close below our stop price, up about $2.70 a share, $2.67 a share from the buy. So kind of watching there. I mean, they're up enough. If you're in those, you don't want to take a risk. You're up well enough to maybe sell half of them. Remember, we were taking $3.50 and $4 calls, depending on what you decided to get, or if you took the commons. It might be something where after this big of a gain, you want to sell it tomorrow before the earnings. That would be understandable too, because I took the options in lieu of common shares, and where my strike is, I'm gonna hold this, see where she goes. But already a good one from a prior watch list. HLF, not as bad of options premium inflation as what I expected, but still kind of ugly. I'm gonna be watching this throughout the day tomorrow to see how the premiums react. But you know, with all that crap with Ackman, and then they released a rebuttal, you saw it drop, come right back. I think this one could be kind of crazy for earnings. So I do have an interest in maybe a cheap little pre-earnings trade on it. We'll talk about that tomorrow in the chat room some more. CNO, I actually really like CNO. I was long in this for a while in 2013. Basically, I caught this up move here, got out before the fall, didn't trade it since. But watching this earnings for an after earnings swing, if they beat on earnings Monday after hours, I might actually grab some commons in after hours. If not, if it doesn't move a whole lot, might wait till Tuesday once I get the chance to actually read the earnings report and all that good stuff, which I do like to do. Tuesday morning, AK Steel, I sent the buy alert on AK Steel at 610. I'm only on a quarter of my original position. Remember, we sold at 740 or 774 and 856, and then we have a quarter of the position left. I'm actually thinking about selling covered calls tomorrow. Not sure what strike I'll do it at yet. It'll be sent out as an alert, so I wouldn't worry too much. I don't want to trade into the earnings. It's run up so much that this thing really has to beat earnings to keep moving. But to sell some covered calls, I'm not interested in really even taking the puts to protect my commons, because they're really free shares at this point with the profits we've already taken. But I kind of look at it. I had that $10 overall target based on my weekly chart. I'll run over to that real quick. You'll be able to see it. $10 right here is that next resistance point. So depending on how the trading goes tomorrow, we'll discuss in the chat room potential covered calls strike to be looking at with AK Steel. But because I'm long on it, that's definitely one that's going to have a focus. Save, another airline stock. I'm long in Delta Airlines, and I'm not looking to go long in another one, but Save has run up so much that if they have bad earnings, you might want to let it settle out a day or two and then look for an after earnings swing on it. Siri has really cheap weeklies. Even the 350 the 350 calls are pretty cheap right now, about a nickel. Because of that, I actually might take a risk, but on a pre-earnings trade, a trade for the earnings. But this type of trade, you just remember, it's more of a lottery trade. Trading earnings is really risky, and I might even do a strangle on it. Again, one we'll talk about in the chat room. So make sure you're engaging with the chat room this week, whenever possible. But it's only going to be if this one stays really, really cheap. HMC, Honda Motors. This one I actually think that, depending on the earnings, could give a nice setup for an after earnings swing. What I mean by that is, whatever move it makes after the earnings, once we can see the report, let it settle down a day or two, and we'll look at a potential swing trade on that. Pfizer, PFE. Again, these are Tuesday morning earnings now, so we'd play them Monday. Pfizer, really cheap options, not much inflation whatsoever. So we'll take a look at those tomorrow afternoon in the chat room, and discuss a potential earnings trade for that to take Monday before Tuesday morning earnings. I'm not really interested in the way overinflated options of UPS. And another from my watch list that I'm just really not interested in taking a trade in right now is Aetna, AET. No interest in that. Tuesday after hours, Glue. We had Glue on two different watch lists in June. Two of our different June watch lists for a buy down in here and a buy down in here. Either one, if you made it, you more than doubled your money. But I'm actually thinking about taking the risk with Glue for a puts play. It won't be a big risk. It is kind of a gamble, but this run up, my target on it was 711. Obviously, it had exceeded that, but that was a pretty darn good target from where we had it on the watch list. So anybody that traded Glue, great job. You made a ton of money. You should be happy with that. If you still have the commons, I would look at taking puts against your commons. One in the money put for every 100 shares you have. It's like a little insurance plan on your commons. But Glue's run up so much, I might look to find a cheap little puts play to throw some money at. Basically the contrarian type trade that it's run so hard into earnings that it really has to have spectacular earnings to do anything now. It's run up so hard that even something in line, maybe a small beat, could cause it to pull back. And that's what my play would be derivative on. BLDP. I'm long in BLDP. Going to be watching the earnings Tuesday after hours. Not going to make an options trade on it. What I'm watching for is if they miss, I'm selling shares. No real interest in NEM for an options play, but they'll report Tuesday after hours. Now, an interesting one you might want to look at for options. X, United States Steel, is going to report Tuesday after hours. Tuesday pre-market, AK Steel reports. If AK Steel does well, X and AK Steel like to follow each other hand in hand, quarter for quarter, and almost candle for candle. So you might find an earnings trade on X, which does not have crazy premiums on those options, based on how AK Steel does. American Express, AXP. I actually like some of the different strikes, and I've done some research on it. This is one we will be talking about in the chat room on Tuesday. A potential earnings played here on AXP that I wouldn't take until Tuesday, but just something I'm watching for. A bulk shipper, SB. Gonna be waiting on this after the earnings. I've been studying it for a while, been interested in it for a while, traded it a long time ago. But here for SB, I want to take a look at the earnings, and I would make a trade after hours should the earnings statement be good. I wouldn't be worried about, I got to get the absolute best penny. So I would take a smaller position, and if it went down a little bit, buy some more based on what that earnings report says or doesn't say. Panera, PNRA, super overinflated premiums. Not going to touch it before the earnings. Willing to swing trade it after the earnings. This thing, if it does good on earnings, literally has so much upside to it. I doubt it would gap all the way to that upside. I doubt it's going to gap up to the 160s or something like that. But if it were to gap up on good earnings, I think it would give back or at least consolidate on the gap up to allow us to establish a support and give us a swing trade either later in the week or into next week. Going over to Wednesday morning, a little penny stock that a lot of people follow, PAL, North American Palladium. It's going to have their earnings pre-market. Personally, no interest in them whatsoever. Taser, TASR, I am going to watch them and studying some of the different strikes and options. I've actually considered, I've been watching it for a while, but I've been considering a January options trade anyway, January 2015, and I may end up taking that before the earnings. We'll talk about this again in the chat room. We're going to be doing, just so you know, about between 2:30 and 3:30 every day probably. We'll be doing a discussion on different earnings plays. So if you're able to be in the chat room during those times, that'd be a really good time to be there. So we'll get a discussion on these potential earnings trades. SO, it's an energy company. I really like SO, and we had it on our watch list on this double bottom area down here. It's played out really nicely. It's up from there. It's not a big mover. It pays a nice dividend. People that like the divvies are going to like this stock. I want to see the earnings, though, to see if we can still plan for that to continue upwards. So for SO, personally, not a big interest in trading at pre-earnings, even swinging it after the earnings right away, but to kind of get a good look at the earnings report to see how I might have to anticipate some others, and to see some people that I do have long in this, what I might need to suggest to them. Goodyear Tires, GT, kind of made that ascending triangle breakout, but holding right at it. It's going to have earnings this coming week. Going to be Wednesday pre-market. Options are pretty cheap on this, and I've been thinking about the potential to strangle play. Haven't really decided yet. I got a couple days to decide. So another one I'm going to be watching and studying, and what I'm doing really by going over this video is trying to encourage you to kind of get into some stuff about these stocks, so you actually have something other than, I think something will beat or miss just because I think that, and I have no really reason to think that, but I drank a Pepsi once and I think it's good type of thing. I want you to get into these and do a little study if you're interested in trading them. I do need to backtrack just a second because I purposely skipped over one for Tuesday afternoon, but then I forgot to go back to it. So let me backtrack real quick to Tuesday afternoon. We're on Wednesday morning right now. But Twitter, yes, I'm not a fan of this one at all, but there's actually a good chance you could see me make an earnings trade on Twitter. Pre-earnings trade, probably by it Tuesday afternoon. So we'll talk about that one more in the chat room this week as well. Let's go back over and get on track with what we were talking about with Wednesday morning earnings. We were just talking about Goodyear Tire, and we're going to go over to Sprint. We've had this on our watch list a couple times for a couple values I've been watching. I want to watch the 744. This is the support area I've really been waiting for. If they do well on the earnings, I'm going to buy it. But I'm not buying it before the earnings. This will be an after earnings trade. Hopefully I can wake up early enough Wednesday morning to see the earnings report and buy it in the pre-market if they do well. So if you're interested in Sprint, you need to be interested in waking up early on Wednesday. The reason I say that is 7:30 a.m. Central Time is when their earnings call is, which is 6:30 a.m. Eastern Time. So you want to make sure you're ready and able to be doing something if you're interested in Sprint. Ben Franklin, not really interested in a trade. I thought about it. I was doing a lot of research. I like that triple top it had, but I really don't like how the options have been trading in Ben Franklin lately. I traded it last year for the same quarter and did pretty well on the same type of chart pattern. Going into it, it had a triple top area. I played a strangle on it. The winning side easily paid for the losing side. Just not too interested in it with where it's at right now. WellPoint, WLP, reporting Wednesday morning. A lot of these insurance companies had a fall last week from other insurance companies, Travelers, a couple others that didn't do too well. I'm watching WellPoint for after the earnings to see what it could give me after the earnings, because plain and simple, if the earnings statement's horrible, I'll let it kind of settle down, maybe even make an up move to give a lower high, and I think it would have room to fall for a puts play. And that would be a longer term swing, I think. So, we have time for that one. That's an after earnings play. Humana, HUM, going to report Wednesday morning as well. Same type of thing. We could find an after earnings swing in it to the long or short side. The fall that it had, though, hey, if you think Humana is going to do really good on earnings, you could play the calls, but I really don't like the options in this right now, and I dislike them so much that I'm not willing to risk an earnings trade on them. Moving over to Wednesday afternoon, LifeLock, LOCK. I really like how it's been trading. I really liked when I bought it right down here on this double bottom. Hated that I stopped out of it. Actually, I'm sorry, I bought it on the first bottom, stopped out of it here. Then it went pretty low and I never bought it again. And now I'm waiting on the earnings for where I may buy it. And after the earnings trade that I'd be interested in. It is Wednesday afternoon, so this might be common shares that I buy in the after hours. So if you're interested in trading LifeLock, you might want to make plans to be available in the after hours on Wednesday. Kraft, I actually think Kraft could give us a decent after earnings play if they beat. Even though the chart looks like, wow, that's really far off the lows, it's not that far off the lows. And I still think Kraft could make a steady rise upwards. Now, this isn't going to be something that goes fast. Those of you that want slower plays, dividend plays, Kraft might be it, but we're close enough now. Let's wait until Wednesday afternoon, see how they do on earnings. You could buy it in the after hours. 52.5 cents a share per quarter for earning or for dividend, pretty decent, and it's slow enough that you don't have to have a lot of worry about Kraft. Allstate, ALL. This one actually has pretty decent options trading in it. I haven't yet decided, but I am considering a potential pre-earnings trade, or one into the earnings to hold for the earnings. And we can talk more about that on Wednesday. It'll probably be based more on where the chart's at on Wednesday than where it is here on Sunday. Yelp, YELP. Remember what we talked about last week? We talked about it with Netflix, Apple, Facebook, Amazon, Baidu, all the big name kind of stocks that are really popular. We talked about options inflation. And quite literally, the best trade you would have had would have been Facebook. Really, I wouldn't even say would have been a good overnight hold on weeklies, because you were risking everything, and you doubled your money on the weekly overnight hold. So yay, but nothing to brag about. Netflix, you lost money on both sides. Apple gapped up, but the calls were down 50% at the open, so you'd have been better off just wait until the next morning. Amazon and Baidu did pretty good because they moved enough, but many of these stocks we talked about, the inflation before the earnings really is not worth the risk. So Yelp, crazy premium inflation right now. I don't want you touching it before earnings. We'll look at after earnings. If you're long in it, take advantage of some of the idiots that will pay those insanely high premiums, and maybe sell some covered calls. But outside of that, I wouldn't be buying any options for Yelp. MOH, Molina Healthcare. This is one I've covered quite a bit. I'm going to have to do more studying on the options leading into Wednesday afternoon, but between Allstate or MOH, I might find one of these two to take an earnings trade in. So on the spreadsheet, I did mark it as a potential earnings trade. We're going to move over to Thursday morning earnings. HL, it's a silver stock. Metals have been kind of doing well against silver and gold, and HL could do well on these earnings. I'm actually hoping they miss on the earnings, because they're going to lag in the earnings from what the charts of the metals do. And if they miss on this earnings, because the metals are starting to trend better, I might buy them long on a miss. So that'd be something to look at Thursday morning. Stillwater SWC earnings Thursday morning. This one's run really, really hard, and if it keeps running really, really hard into Wednesday afternoon, I might take some puts just on that contrarian gamble. The one that says, well, it's run so hard that it might just need to pull back some. Otherwise, because it's got morning earnings, to wait until it opens and find a trade, then you'll still have that whole morning rush with the earnings, and I think you could have a good trade even Thursday during the day on Stillwater. T-Mobile, TMUS. T-Mobile's at an interesting point to where you may find a swing after the earnings. I marked it as a potential after earnings swing on our matrix there. Not really one that I'd probably look at to take, but if they do well and you like T-Mobile, we'll be able to establish a pretty decent support and find an entry based on their earnings. So that's what we want to wait for. I like that it's fallen so much, because then if it does gap up a little bit, it's fallen enough that you can anticipate it having the ability to continue upwards if the earnings are good. Let's go over to another energy company, that CVI. I have an interest down the road, not necessarily right away, but I will be watching CVI's earnings. I'm not going to play an earnings trade, and I'm not even looking for an after earnings swing. I'm really studying some stuff with CVI for a potential trade that might take place, later in the summer or earlier in the fall. But that's really all the interest I have right now in CVI. ARR, dividend stock I've got. They have earnings Thursday morning. I'll be honest, I've made so much with the dividend and reinvesting the dividend. My average is so low that I really don't quite care what it does on its earnings. But if it drops on its earnings, the fact that it pays a 5-cent monthly dividend, if you've been waiting to get in it, that might be your opportunity. So we'll talk about that after the earnings and after I get to see the report. Another little cheapie, Alcatel-Lucent. I actually think that this company is consolidated, even in a kind of trended downwards enough that if it beats on the earnings, it could have a nice little spark in it. I hate that it's reporting pre-market, because unless you're awake to really see it and buy it pre-market, you might miss a big run up that might just be a opening gap up for the open of the day. If you are available to see that, and if it does make that run and it makes the big gap at the open, be prepared to sell if it loses the open price. Just make it a simple trade. And then as it starts to fall a little bit, you could start scaling in with some of your profits and build a longer term position if you're interested in that. SU, I don't really have an interest in this one. It's one I study that's on my watch list. Suncor, I think, regardless of the earnings, it's not at a fair valuation to trade. I mean, quite literally for me, it would have to do quite a bit to get to where I'd want it. But at the same time, if it posts $1 or more for this earnings, it's actually would be hard to say that it's not at the perfect place to buy it. So be looking for their earnings. They are pre-market earnings. I really, really, really wish that this one would have pulled back a little bit more into the earnings. I hope it does during the week, because then I may take a gamble on it, but otherwise really not sure. COP, I just took a little teeny tiny pre-entry on COP. You guys know I'm long on XOM, and then we have CVX in our focus group watch list. COP, it hit my long-term target, and it's been consolidating there. And I've just seen way too many times that stocks do this, and why is it running? How come it's run so much? And then earnings didn't even matter. It still started to pull back. So for COP, I might actually, depending on how it trades, I might actually buy some more puts before the earnings. I doubt it. I might just enjoy them after the earnings, or use my wee little bit to average down after the earnings and continue a fall with it, because I think it would have a good room to fall, probably to about $75 at least, just based on the chart. Kellogg's K. I think after the big run up it had and the consolidation it's made lately, that we could find a good after earnings swing on it, but I think we want to wait for after the earnings. Colgate Palmolive CL, another one that could give us some potential after the earnings. Where it's trading at right now, I don't like. So if it were even to jump up on earnings, I would actually probably look to go short maybe a couple days after the earnings, once it establishes a support. If it were to gap up, get a couple days to give you a support level, and if it breaks that, that's where I would look to go short at if it were to do that. Triple D. Yeah, I had a fun ride with this, and it has been looking better. I'm not one of those that's in a rush on long-term positions that, I got to get the absolute best penny price. I am going to wake up Thursday morning early and watch this one for a common share entry. If they do well and beat on their earnings, I may try to take it for commons. If they don't beat on their earnings, I'm taking it off my watch list completely. I had my ride with it, went from $1.50 to $82. I wish I could brag that I went to 97.28. I can't. I sold it up in here on this day, and it started really falling. And I said, I'm gone, and I got out at $82. So I didn't get the full ride, but I had a nice ride. So I'll give it another chance. But if it doesn't do good on the earnings, I'm actually deleting it from my watch list. So Triple D, that's where I'm at with that one. L3 Communications, LLL. We did pretty good with our Lockheed Martin trade for earnings, but I really wouldn't touch this one for earnings. I'm interested to see, though, how Obama's mandatory minimum wage increase on the defense contractors affects L3, because of the big ones, your Lockheed Martin, your Northrop Grumman, L3, and Raytheon. L3 has the most lower paid employees that they would have to increase pay for to meet that $10 paycheck, $10 an hour paycheck. And I want to see how that affects them on this earnings, because I think it could be a gauge for the sector as well, and it's a gauge I'd kind of be worried about. So I'm going to be watching that. CI, it's another one that I actually think could give you a potential puts play, but I would wait until after the earnings, because it's got plenty of room to fall if it does bad on the earnings. Another one, Thursday, AM, pre-market, XOM, which I'm long in. I may buy some puts during the week, but it would only be determined if it failed this trend line here that you see on my chart. We bought these way down here. I'm really not worried about $1 or $2 each way. That really doesn't bother me much. If I was bothered by that, I would have sold here, I would have sold here, and I wouldn't even be in it up here. So if it does fall, this more recent trend, I'll buy some puts but keep my shares. Otherwise, just watching the earnings Thursday morning to see if it can continue up, or if I maybe need to make an exit after a really nice long position that we've had. Vonage, VG. I'm actually thinking about some cheap calls, maybe even in the money at $3.50 strike or the $3 strike. Thursday pre-market, so it'd be made Wednesday afternoon would be when I would make that trade. We can talk about that one more when we see how it trades through the week to decide if it's worth making. Walter Energy, WLT, I am long in Walter. Thursday morning earnings, I will be taking puts for this, but I will wait until Wednesday to take them, unless we actually fail the lows of the last consolidation before the earnings. If we get into the 540s or the high 530s, I'll be just taking puts then. Otherwise, I'll probably wait till Wednesday afternoon. I'm not going to buy any more shares for the earnings. If they do well, guess what? No stock goes straight up, no stock goes straight down. So if it ran up, I may even reduce some and just buy more when it pulls back. And finally, another one, MA, MasterCard. If AXP does well, or just based on how AXP does, we saw Visa miss Thursday night. If AXP, American Express, misses on Tuesday afternoon, then there'd be a good likelihood that MasterCard may miss as well. So we could use the previous two to gauge a potential play on MasterCard. The options are a little bit inflated, but nothing too bad right now. So we'll have to check those inflation levels as we get closer to making the earnings trade. Tesla, we'll have to see what the premium inflation is Thursday afternoon, because they do have Thursday afternoon earnings. But where we'd be with Tesla is, not only is it the world's most expensive penny stock, but I wouldn't want to touch it for the earnings. Super inflated premiums. We'll see where they are on Thursday, but as of right now, I wouldn't touch it with Satan's money. But much like Baidu last week and Google the week before, you could plan for making trades on the extra added volatility Friday on Tesla, just because it has the earnings. Another one that I want to make sure you don't touch due to the inflated premiums is Expedia. TripAdvisor had earnings this past week, had super inflated premiums, and even though it gapped down $10, puts lost money. That inflated premium, it's just a flat out ripoff. Don't get yourself suckered into it. If you do, I'm sorry that you didn't listen. And if you do, understand that you're probably going to need a gap down more than $12-15 just to break even. So the hindsight traders, if that happens, they come out of the woodwork and brag about this big time trade they made. But you can't really, to me, justify making a trade that overnight would have to move $10 to $15 just to break even. That does not make sense to me, and I really don't want to see you doing it. LinkedIn, same thing. And because we have, Coach Henry trades the snot out of LinkedIn, I think LinkedIn may be the best chart for people to trade on Friday. Even better than Tesla or something. It has Thursday afternoon earnings. Let it have its earnings and trade the extra volatility on Friday. I took a small position recently in HNSN, just kind of guessing off this bottom down here, and it had retested. I didn't buy any more. I'm waiting on the earnings. I mean, I've got so little right now, I don't really care much what it does. If they miss after hours on Thursday, then I'm just going to sell it. And if they beat, I may take a little bit more for a run up off of a W. And we've studied our W patterns, and that's what we would have there. So, above 125, 126 or so, be looking for that. SPWR, it's going to be one of the first solar stocks to really come out and start doing their earnings. So going to be watching that and, see where we go. We're also going to get numbers on Solar City when we see Tesla. I could care less about, the Elon Musk cult following. But SPWR has been a solid company, looking for their earnings, looking to see if they can report 45 cents or more. If they do, they're probably going to go up to $45 to $52 on a swing. It is a slower trading solar, so you don't want to get too antsy on it. You'd want to swing it up there, and you can wait for the earnings to do that. And then finally, Friday morning pre-market, CVX from our focus group. Going to be watching Friday morning earnings. We can get an idea of how they're going to do when we see XOM and COP report Thursday morning. But Friday morning, CVX earnings, August 1st. And then we get into the month of August. Last year, the month of August sucked. Well, it only sucked if you were long. But if you traded the charts for what the charts said to trade, it was decent. So I'm not going to say that's where we're at. I'm going to say that we're going to trade the charts and how the charts do. I also want to encourage you to make sure you take some time to watch those earnings, inflation, the premium inflation, and also just kind of take the time to use the chat room as a good learning experience. And we will see you in the chat room. Each day we're going to talk about earnings trades coming up, but probably about 2:30 to 3 o'clock in the afternoon. We will talk about the earnings trades, because the earnings trades, you don't want to sit and hold them all day, and because if you make the earnings trade, you're holding it for the earnings no matter what. And there's some crazy stuff that can happen during the day to make it so you might get screwed no matter what. So if you're making the earnings trades, you make them in the afternoon. And we'll be talking about those each afternoon this week.